Obamacare, the Affordable Care Act, minimum essential coverage, exemptions, employer coverage. Information designed by James R. Lorenzatto and presented by Mark Lorenzatto for VideoHealthGuide.com. This is video 6 of Series A. No affordable coverage at 8% of household income. Employer-sponsored insurance. If health insurance for you and your family costs more than 8% of your household income, then somebody will be exempt. This applies to both employer and private coverage. This exemption gets complex and needs some background knowledge. This video deals with employer coverage for you and your family members, and the next one deals with private coverage. Exchange plans, the metal levels. To understand how this exemption works, you must know how insurance will be sold on the marketplaces. For now, the marketplaces only sell individual, family, and small employer group insurance plans. The plans come in 4 metal levels. A separate catastrophic coverage plan is only for people under age 30 or with special circumstances, hardship, and no affordable coverage exemptions, and it does not get tax credits. Each level represents the percentage the plan pays for the allowed cost of the average person in the marketplace rating area. The percent is called the actuarial value. Platinum plan is 90% of the average person's cost, gold 80%, silver 70%, and bronze 60% of the average person's costs in the marketplace rating area. Catastrophic plan is the additional plan available. To fill a gap. This exemption fills a gap. Employees can get tax credits only if the employer doesn't provide at least bronze level 60% coverage, or the employer's lowest cost bronze level only coverage costs the employee more than 9.5% of household income. Some employees can cover themselves for 9.5% and thus can't get tax credits, but they can't cover their families at 9.5% of income. So, where employer coverage at bronze 60% level costs more than 8% of household income, the persons affected become exempt. There are different rules for employer plan self-only coverage, employer family coverage, and coverage bought on the private market. This video covers employer, self-only, and family coverage. The next covers private insurance. Special definition of household income. A special definition of household income exists for this exemption. For each income earner who is required to file income tax return, you take the person's modified adjusted gross income, or MAGI, and also add on any amount that person paid towards their coverage premium using an income reduction arrangement that was excluded from their gross income. Adjusted gross income for income tax plus any excluded foreign earned income, 26 U.S.C. 911, plus any tax-exempt interest, plus any amount paid for premium by a salary reduction arrangement equal the worker's annual income for this exemption. Add together the taxpayer and the spouse of filing jointly and the incomes of all dependents for whom the taxpayer actually took an income tax deduction exemption and who must file their own income returns, including any amount for their excluded income from salary reduction arrangement, and that is the annual household income. Employer self-only coverage. Under this exemption, when employer-sponsored coverage is an issue, you do not consider whether a person has any other source of minimum essential coverage. If there is one employee and the employee's share of the premium for the lowest cost self-only bronze level 60% employer coverage is less than 8% of the annual household income, that employee must get coverage. If there are 2 or more employees in the household, each employee must look to his or her employer's plan and is not treated as a family member on another employee's plan. But if the aggregate self-coverage policies cost more than 8% of household income, all the employees are exempt. Employer family coverage. Again, you do not consider whether a person has another source of minimum essential coverage. If the employee's share of the premium for the lowest cost self-only bronze level 60% employer coverage is less than 8% of annual household income, that employee must get coverage. If the employee's share for lowest cost bronze level plan for the employee and all eligible family members who aren't otherwise exempt and for whom the employee actually took the income tax dependent deduction costs more than 8%, the family members are exempt. But the employee must still get self-only coverage. People eligible for continuation coverage must be actually enrolled for that coverage. Household members not actually claimed for the dependent deduction have income individually determined. Like the other exemptions, this one is calculated by the month, and the coverage for 1 day a month equals coverage for that month. This exemption makes someone eligible for catastrophic plans, but such plans don't get tax credits. This annual exemption is only available from the IRS with a taxpayer's tax income filing. However, the marketplace will determine if someone is eligible for it using projected household income during the year, so the person can know whether to buy coverage or if he or she qualifies for a catastrophic plan. The marketplace exemption is for the months of and after the application, and it remains in force despite a later change in circumstances. The application to the marketplace must occur while the applicant could still enroll in a qualified health plan. After that date, the applicant must file with the IRS. We have covered the exemptions about self-only employer coverage and about employer family coverage. The last part is about coverage you buy in the private insurance market and is on the next video. Next, no affordable coverage exemption, private coverage. Exemptions take up 4 videos. Choose the videos that best fit your needs and watch them. You have seen depending upon legal status, depending upon what you earn and can afford, lack of affordable coverage, employer coverage. Next is lack of affordable coverage, private plans. Thank you. This is Mark Lorenzato for VideoHealthGuide.com.